Cannabis stocks, they go up big, they go down big. People make all the money, people lose all the money. But are they a good investment? Well, that depends on how you define investment. It's the Cannabis Stock episode of Cannabis Legalization News. Hello, I'm Tom, a former stockbroker that really should not be giving you financial advice. However, if you're going to buy cannabis stocks and you're looking for information on them, so here's what I think about them. They really are too new to be considered an investment like a Warren Buffett would review a company and then determine its value and make decisions about the appreciation of that company's value and make an investment in that sense. Cannabis stocks, pot stocks, I think they're more speculative. They go up and down all the time, by a lot, based on their perceived value because of legalization, which is coming someday. The balance sheets of these companies that you can buy really aren't all that great either. They could be better under Schedule 3, and we will cover that in a little bit. But let's compare 4 or 5 cannabis stocks and see if they seem like a great investment compared to a tech stock that's well established. For example, Amazon. Let's see if they look like an investment or if they look more speculative, as if you are placing bets at a roulette table. And for a lot of these cannabis stocks, one of the reasons why I don't often put my money into them is because I don't see the value when it comes to what they mean to me, what the moat around their operation is, how strong their management is, and what kind of discount they are trading at, so I can have some margin and safety on my investment because the market has mispriced that equity, that stock asset. Let's talk about a few of these cannabis stocks that you can buy right now on any app that allows you to trade over the internet. I'll pull them up. I'll see you in the computer.
Okay, now we're going to go behind the studios a little bit, but not really. It's just that I wanted to share my screen as we went over these stock charts so that we can talk about cannabis stocks relative to like a well-performing stock. That's one that I would actually buy. I'm not saying that I wouldn't actually buy cannabis stock. There's a few that I think are really interesting, and there's one that I would probably use as a proxy to buy it. Stick around to the end to see that. Don't forget to smash those likes and subscribes, and let's talk about some of the cannabis stocks that maybe you own. I'm going to blow this up a little bit so you can see it a little bit better. Hopefully now you can see the actual stock tickers themselves. There's MSOS. That is an ETF that we recommend if you want to like just get exposure and not necessarily dabble in individual stocks. You can buy that one and get a basket of all the cannabis stocks. Then there's Gram F. Gram F was somebody on the show. That's actually the holding company. That's Jay-Z's SPAC. It's been hammered recently, so you can get it cheap. Verano is underneath that. Verano, like these things happen all the time. Verano had a over 10% pop today. And if you look at it, it was just during the trading day doing nothing. And then zoop, just suddenly toward the end of the trading day, it goes up 10%. This is not all that out of the ordinary for cannabis stocks. They tend to be highly volatile. And then there is underneath Verano, Curaleaf. Curaleaf is the largest publicly traded cannabis stock. And then under Curaleaf is Trulieve. Both types. There's the .cn and also the F. Underneath that is Cresco, and then underneath that is GTI, Green Thumb Industries. And we're going to use Amazon as an example of what good balance sheets look like. This is important. Like when you're buying stocks, you're usually buying cash flows, or you're buying assets, you're buying growth. You're making an investment based on a theory of performance in the past that you think is going to continue because management is really strong, because that particular operator has built a moat around their business so that other competitors are going to have a much more difficult time coming up and knocking them off. And that's why we're going to kind of go through Amazon relative to these other stocks and say, like, are they investments or are they more speculative bets? I'm of the opinion that currently cannabis stocks are more speculative bets, and they will be speculative bets until after they are publicly traded and we can actually see whether or not a lot of these companies, which are losing money, and their thesis for what the industry will look like is proven wrong. So let's dive in a little bit to that. Let's start with one of the smaller of them. Let's go with Cresco Labs. And so here's Cresco Labs. Today, it was just a regular, normal trading day. It's only up about 1.42%. One of the things that I like to do after we check some of the basic statistics is to go into the financials, because that actually shows you where the cash is. As you can see, it's got a market cap of $5 billion. Out of the shares outstanding, there are 129 million. The public float is 136 point something. That means that there's either insiders or institutions holding really only about 6 or 7 million shares. Revenue per employee is approximately $92,000, which, to be honest, is quite low. Earnings per share is negative 38 cents. That means that for every share this company lost 38 cents, it is worth $5 billion. Let's compare that relative to Amazon. Amazon its market cap is substantially higher. It's 1.5 trillion. It has 503 million outstanding shares and a public float of approximately 430 million shares. So we have insiders owning substantially more, and then I would assume it's not just insiders, it's also institutional investors. And its earnings per share is like almost 42, which is really, really nuts. It's a lot of earnings per share of Amazon, to be honest. Its price to earning ratio is actually expressed. It's 74 almost. And revenue per full-time employee is almost 300,000, which is more in line with what you see in publicly traded companies. Walking backwards, we can go to TrueLeaf. TrueLeaf is a monopoly out of Florida. They represent 50% of the Florida market. It's $5.8 billion. Its shares outstanding are at 58 million. Remember, Cresco Labs has 129 million shares outstanding. Now, of course, Amazon has 500 million shares outstanding, so it's almost 10 times the float. TrueLeaf. I get Curaleaf and TrueLeaf confused. This is the only cannabis company that I've seen that has posted positive earnings per share of 56 cents per share and a PE ratio of 91.5. The average revenue per employee is only 82,000. So this is the only profitable of the publicly traded cannabis companies that I'm aware of. Curaleaf is the actual largest player. Sometimes I confuse it with TrueLeaf. It has a market capitalization of $10.85 billion, a public float of 239 million, and shares outstanding of 590 million. That's really interesting. How many insiders are sitting on Curaleaf shares? It loses 10 cents per share. So it's got a negative earnings per share of 10 cents. Relative to GTI, Green Thumb Industries, a fairly large cannabis company as well. Its market cap is 9.7 billion. It has approximately 178 million shares outstanding, with 118 in the public float. Green Thumb Industries recently closed an institutional investment of $100 million. Maybe that is why the public float is substantially lower. It's really the only cannabis company that I'm aware of that has institutional money. Curaleaf could be the other one, because its public float is substantially shorter than its shares outstanding. This one loses 13 cents a share, not to be undone by Cresco, which of course loses 38 cents a share. So I'm hopeful that you're kind of seeing some of the flavor of why I want to steer clear from these cannabis stocks, simply because just from the smell of it, you're like, all right, so you guys are trading these. You're not really making any money. You're not really earning too much per year. What else happens as you dig into it a little bit more? And now we're going to look at its cash flows and its financials to compare it to where Amazon is and see the real difference between these two types of companies. And who's managing these companies? Why am I invested in these companies? Do I think that the multi-state operator that just controls the monopoly, like in Florida, is that Is that America? I realize that Amazon, Google, all these other providers have a very monopolistic aspect or a grasp of the particular industries in which they serve. But at least that anybody could have become that Amazon. Anybody could have become Google, provided, of course, that you had their knowledge and then also access to capital, which most people don't have. So raise that money, everybody, and be smart. Okay, so let's get into their financials, and then we'll try to see why one of those stock prices may have just gone to the moon. That's Amazon, and why some of them are, they shoot up and they shoot down a lot, depending on perceived value and perceived likelihood of legalization. Okay, so my favorite one to start with is probably Cresco. As you can see, like, Cresco really didn't exist until about 2015. So we don't have a very long established track record, and they didn't really get listed so that you could actually buy and sell them until closer to 2019. And that's really the only year that we have data for. We can look at the sales revenue. And so, like, for 2019 is what they reported. Cresco had sales revenue of $170 million. Cresco had revenues in 2019 of $170 million. GTI had revenues of approximately $290 million. Curaleaf had revenues Curaleaf's actually also reporting for 2020, but in 2019, Curaleaf's revenues were approaching $300 million. And for 2020, they were $850 million. That may explain why its stock price has gone up so much, because they actually have cash flows, and they're actually reporting for 2020, which is nice. And then TrueLeaf is not reporting for 2020 yet, but its cash flows for 2019 were $335 million. And of course, you know, the TrueLeaf Cannabis Company is worth only $5.8 million. But remember, it does control 50% of the Florida market, because the Florida market is an exceedingly limited market. And then Amazon had revenues in 2019 of $280 billion. Wow. And then in 2020, they went up to $386 billion, which is kind of ridiculous. I mean, that they're still posting this type of growth. I realize COVID-19, but that's just so much effing cash. And so let's go back to Cresco. Cost of goods sold has creeped up to $236 million, which is nice. It means that they're selling more product. But then when you go down to its gross income line, you can see that $236 million that they quote unquote made ended up losing them almost $66 million. And so, like, they aren't making any money. And not only they are not making any money, they had an unusual expense of $140 million. Not sure what that was. And then they had non-operating income expense of negative about $8 million, with a pre-tax income of negative $67 million. And so you're looking at a pre-tax margin of negative 39%. So yeah, it's just net income of negative $57 million. You're just losing money. Your earnings per share is negative 48 cents. If the word cannabis wasn't in this company, I would have just been like, I'm leaving. I'm not looking at this. This is a cash suck. Here's my money. I don't want it back. You know, it's Cresco. It's not necessarily the best turd in the bowl. So let's move on to GTI, and GTI is doing better than Cresco. They actually had sales growth of 250%. And a lot of this was loosening the restrictions that these licenses have. Again, there's a lot of limited market space. So like New Jersey coming online could be more revenue for them. Illinois was a lot of revenue for them in 2020. And then they are in other states as well. And so they're trying to grow that revenue, but they're doing so at a fairly expensive pace. So their cost of goods sold off of that almost 90 top line, cost of goods sold was $181 million. Ouch. Pre-tax income was negative $66 million. Wow, they had interest expenses of $18 million. Ooh, their debt is getting expensive. GTI's debt's getting expensive. That's a shame. But at least they are deferring income taxes. That's one of the nice things about losses. Their consolidated net income was a loss of $80 million. Their minority interest expense was negative $570,000 with a net income of approximately negative $80 million. Boy, how do they get money? And so, that's right. They go to, let's talk about their shares outstanding. Here's how they get some money. And what you do is you just sell more shares. And so they had basic shares outstanding in 2017, before they were really publicly traded, obviously, of 84,000 approximately shares. And they popped up in 2018 of 130 million, 2019, 190 million. And what is the current float of GTI now? Let's see. Their current float is 178 million. So they really have not issued any more shares. So they haven't diluted it further than that. So now let's go to Curaleaf, which is one of the more successful of them. Do 840 million on sales. Their cost of goods was 710 million. Yikes. And then so that means that they're really kind of coming in at a gross income of only 130 million. Remember, this is a gross income of 130 million. This is almost an $11 billion company. All they did was make $130 million. And so, of course, your company's worth 100 times that. Why not? Cool. I got to get me some of that company. And how's their interest expense? Theirs isn't, there's kind of bad. I mean, look at the debt that you see on here. I'm going to zoom in a little bit more. And so their interest expense has gone from 9 million to 32 million to 92 million. This sucker's growing bigger than the national debt. And so their interest expense growth is clipping along at a couple 100% a year. Their gross interest expense is now up to $92 million. Yikes. And so fortunately, interest rates are at an all-time low, so they'll be fine. So let's now dig into a couple of different financials. We're going to go to the only profitable cannabis company I was able to find, and that's TrueLeaf. Now remember, they have a monopoly in Florida. They own 50% of the market in Florida, and they're posting a profit. So let's look at that, and then let's look at Amazon's financial statements, and you'll just see a lot more green and a lot more growth and a lot more return to shareholders, hallmarks of what I would call a good investment versus more hallmarks of speculation, which is kind of what I think the cannabis stocks are, speculation. Into their financials, you're going to find that they have grown fairly well. Florida's medical market has really grown. But in 2019, they did $335 million worth of sales. Their COGS on that, their cost of goods sold, was $309 million. So I guess they really have a tight profit margin. And that means that their gross income was $26 million. Gross income growth, that really just slowed down, didn't it? Between 2019 and 2018, their gross income growth only grew by 6%. Their unusual expense was $442 million. Very interesting, unusual expense. Their interest expense is growing, but their interest expense is nowhere near as heavy as Curaleaf's interest expense. And so they did have pre-tax income of $361 million. Income tax, they paid a lot. They actually don't have the deferred as much as they paid income tax. Net income growth of 500%. That's pretty good. So their net income went from 36 million to 236 million. There you go. Net income's actually available to common stockholders. That's fantastic. They, in theory, could make a return. You actually have earnings per share. This is kind of looking like an investment, at least until you get down to EBITDA, and you see that they did kind of have a loss of 40.1 million. 41 million approximately, and their EBITDA growth did shrink there. But yeah, that's substantially better than looking at GTI or Curaleaf. Let's just pull up GTIs and then throw that down to the end there, where they don't have anything in their earnings per share. they don't have anything to return to common. It's not necessarily a great investment at all. And True Leaf looks substantially better than that when you look at they actually have earnings per share. In theory, they could return something to the shareholders. You know, that you could make a return. That's more of an investment. Now, of course, they do own half of Florida, but let's compare that to Amazon. So their EBITDA is like $40 billion, not necessarily losing 40 million, but $40 billion. Their earnings per share is almost $42, which is obscene. Of course, their earnings per share growth has gone from 6 to 20 to 23 to 42. Like, that's nuts. Their earnings per share basic growth is pretty much all in green. Net income available to common stockholders, it's gone from $3 billion to $10 billion to $12 billion to $22 billion. Now, like again, which investment am I going to make when I'm presented with this and I'm looking at it, and then I still look at the story of Amazon versus the story of, well, why did True Leaf post a profit? You have a monopoly in Florida. Okay, so that's your plan. Keep a monopoly in Florida. Good luck on that. All of those things just make me say, like, I think this is going to be speculative. Let's talk about two more, and then I'll finish it up, back there. This burning battery. You can see it. Teleprompter. All right. Two more. And these are different. All right. And so, like, one of them we really don't have to talk about too much. So if I was going to get in or out, if I thought like legalization's coming, people are going to be hot, the stocks are going to pop again until somebody says, well, it's not actually legalized, and then they're going to drop again. I'd probably just buy the MSOS, because the MSOS is essentially the ETF and you see it's U.S. Cannabis ETF. So it's got a hodgepodge of all those other stocks that were in there. Its year-to-date return is about 27%, 52-week range. It's got a lot of trading volume in it, to be really, honest. 1.2 million shares were traded. Its average volume is over 1 million. It's not very old. I think one of the reasons why you see such pops and drops and movements in cannabis stocks is because a lot of people at home are trading them. Oh, that's one thing that we could have compared. Floats and valuations. We'll do it on another cannabis legalization news episode with stocks. Check out MSOS if you actually want to get into and out of and play the trends in the cannabis industry based on the perceived valuation increase that's going to happen when legalization happens. The other one that you can check out is Graham. Graham is a different style of operator than a lot of the other ones. It's getting killed right now, so in theory, I guess you could get a good deal on it. It has like absolutely no earnings. It's brand new. And that's Jay-Z's one, and that's the one with the parent company. And so they are trying to create expense-light revenue models, more like an Uber style, where it's going to be houses of brands and then contracts with the growers and then also the retail outlets for the distribution of the product. Is that what's going to win out over these multi-state operators like Cresco and GTI that are trying to be completely vertically integrated? I don't know. We'll see. How about we finish it up over there?
Wasn't that more information than you wanted to hear? All right, so let's wrap up. These cannabis stocks, they can go up 300%, they can go down 300%, and there's this massive float on them. You saw there was hundreds of millions of shares outstanding. They're fairly thickly traded, and that ETF that's based off of them also has like 1 million shares that are traded a day. There's a lot of day trading that goes on in the cannabis stocks that can make them extremely volatile. And when you dig into it, it doesn't really look like the disclosures from the financial statements really warrant any types of valuations like what they're trading at. But that doesn't matter, because the stock market doesn't make any sense. You can put some money in this, one of these cannabis stocks or the MSOS, when people believe that this new year is going to start and there's going to be new legalization and new markets and we're all going to be rich, and then they're finally going to legalize it, and then I'll be so stinking rich because I got these cannabis stocks. And then what happens? The sales aren't near as good as people thought. New competition comes in and totally ruins, for example, True Leaf's Florida monopoly. All of these types of market risks could finally come into play if the limited market wasn't so limited. And that's what we really hope. So we don't necessarily know where the good management is or where the good moat for your cannabis brand is that's going to be able to create competitive advantage and have a real investment that puts up numbers, maybe like an Amazon stock. That may never happen in cannabis, but amazing numbers based off of real sales growth and creating a moat around your business, and a business that, especially in cannabis, has an impact investment, something that matters to you. All those things are really, really important in cannabis stocks, but it doesn't really matter because people usually just buy stuff and sell stuff when they get bored. See you real soon on Cannabis Legalization News. And don't forget to hit the likes and the subscribes so you see more of me and Miggy and Lauren and a whole bunch more of those 420 somewhere bumpers.